So xauusd, in line with the rising cost of metals, gold is showing some strong bullish reaction. Gold came in at 2,600 into 2,604, a very strong support structure, respecting the structure of the market, and buyers have shown very strong demand. And when we look back to how we started to make the structure of this pair, we looked at the yellow metal have followed structure extensively. A support structure, break of a support structure, retest. A broken support become resistance at this level. The 2 points have formed an ascending trend line. So we have price return here and demonstrate a sell, had a supply at this level. So we'll try to spot where the demand level, where the supply level. So this technically started creating a supply level for every time price returns at this level. It's always a take profit time. So price return on this level again, and we had another supply. And we return at this level again, we had another supply. So a break of a resistance structure, we turn to demand. So this becomes a new demand level. Price pushed up again. We return to the same level, a broken resistance, now support, now a new demand floor, an ascending trend line respected. When price returned again on that line, this become our temporary demand floor. What is demand? Demand is buy. What is supply? Supply is sell. So we came to this level, our new demand level. Price broke this structure. What structure was broken? The support structure after a few consolidation. So we consolidated on this floor, broke the structure, and due to fundamental analysis, this happened on a non-farm payroll data, which struck price out of the zone. Now, close of Friday, price returned. On a critical look, we have a heavy bullish candle that have broke the structure to return to the demand floor. But from the roof side, on 4 hours, we have a temporary rejection level acting as a descending trend line, creating a chart pattern. The two black lines have created a chart pattern where we have here as resistance, a break of a resistance, return. This becomes a support, a descending trend line. So price played into the structure perfectly. And when price returned, we had a three-time retest to this descending trend line. And on a double confluence from the lower structure support, which we have here, we have a support structure, break of a support structure. We had a retest. So here we have a retest, a break of a resistance structure, becomes a new demand floor. This becomes a temporary demand floor. So for every time price returns on this place, it is demand. We return here on demand. So we return here on demand. We return again on demand. A break of a demand floor becomes a supply floor. This becomes a supply roof. So we started supplying at this level. So this becomes a critical line. We may like to call it a psychological 4 hours ascending trend line where demand and supply meet. Why do I say demand and supply meet? If we have a break of a resistance structure on this supply line on the line, if we break the resistance, it becomes a demand floor. If we break the support, the support level, it becomes a resistance floor. So for here, we came back, we broke this structure. What structure was broken? A resistance structure. resistant upswing. This has been a demand, a temporary supply level. We supplied at this level once, supplied twice, supplied the third time. So this change in character was what led to the break of structure. So we broke out from this ascending trend line. We came back here again on demand. So this is our temporary demand floor. We had a demand here from the previous data building up. It is very evident that this is where demand lies. After testing for the first time, we had a demand at this level. Price return again on a second demand, and the price action did not fail because this has been a consistent demand and supply trend line. So we will be discussing how most trend line become a demand and supply point. So we'll discuss that extensively in our weekend review on what's happening in the markets for most metals. So when price came here again on demand, price have pushed over 500 pips away as a result of the demand. And when we look at it, we try to measure the impact from this demand level to when we had a temporary resistance, which brought us to our current all-time high. We like to look at the distance and the impact on price and see if the retest to the same demand level, what similar impact will it have? Will it have impact similar to what we had in the past? So we'll be looking at it and assessing it using the price action. So we have here, so if we clone this price length, we like to bring it to the same level to see where the next wave of demand will be exhausted. So when we look at it critically, we can see this is our current all-time high. So our current all-time high becomes our new supply zone. Price didn't test this supply zone, but however, we would like to measure and align if we were to go by this, if price is to repeat the same, this is most likely where SAU new supply zone will be. So at this level, we'll be expecting a supply. So we'll look at it critically to look for more double confluence. It might not really get to this point, but we know that as price returns back to the demand floor, this is a demand floor. Price bought here, demand, break of a demand floor. Now we come here, resistance, close of weekly candle broke above this level. So it will be too fast to make a quick decision. But however, it is important to see how 4 hours candle close above the descending resistance structure. So a break and close above this structure will further open a gateway to this level. So we'll be looking at it, and I believe that price will play into this net based on the structure of the market. I believe there will be a play into this zone. So we will see it, and the metal markets are doing well, and copper is doing well, silver is doing well, and we look at it and